Hi, I'm Adam Zuercher, CEO and Chief Investment Officer of Hixon Zuercher Capital Management. And today I want to talk about the first quarter of 2017, and I want to give you an update for the month of April. Well, now that the first quarter is in the books, we can review the first quarter, and we have a lot of positive news to report. So we don't have official economic data just yet, but what we do know is that the stock market had a great quarter in the first quarter. All of the major indexes, or all three of the major US indexes, ended the quarter up at least 4.5% for the first quarter. The S&P 500 was up 5.5%, the Dow was up 4.6%, and the NASDAQ was up 9.8%. which was the best quarter since 2013. Most of these stock market gains occurred in January and February, as the NASDAQ was the only of the three indexes to be positive for March. Well, most importantly, we passed a major milestone in March of this year. On March 9th, 2017, we had the 8-year anniversary of the lowest point in the stock market during the Great Recession in 2008-2009. So the low of the bear market occurred on March 9th, 2009. I remember the day very well. It was a Monday, and many investors just got their February account statements for 2008 over the weekend. We had several calls on that day, and many investors were worried and beginning to panic because it was the 6th month in a row where their portfolios were down and stocks were down. A couple of clients even wanted to liquidate their entire portfolio, which would have been a devastating mistake. Thankfully, they didn't after talking to us, and they continue to stay invested. So what I want to talk about today is the enormous amount of progress we've made in the past 8 years. The economy has come a very long way, and I want to show you or tell you about 3 indicators that show us that the economy has made a lot of progress over the past 8 years. So the first indicator that I want to talk about is unemployment. In March of 2009, unemployment was sitting at 8.7%. Unemployment got worse throughout the rest of 2009, and it peaked at 10% in October 2009, which was the highest rate of unemployment we saw during the Great Recession. Today, unemployment is at 4.7%. That is less than half of the highest rate that we saw in a recession. So the labor market has come a long way over the past 8 years. The second indicator of the amount of progress that we've had in the past 8 years is GDP growth, which is how we measure the growth of the economy. So in March of 2009, we had just learned that the economy contracted 6.3% during the fourth quarter of 2008. That was the worst decline for a quarter that we saw in 26 years. Now here we are today, and what we do know is that the fourth quarter of 2016, the economy actually grew 2.1%. So over the past 8 years, economic growth has been slow, but the economy has grown almost every single quarter since 2009. So the third indicator that the economy has made a lot of progress since 2009 is that the Fed is now tightening interest rates. So from 2006 to 2015, the Fed did not increase rates a single time. In fact, they lowered rates from 5.25% in June of 2006 to 0% in December of 2008. Rates then remained at 0% from December 2008 until December 2015, when they increased rates for the first time in 7 years. On March 15th, the Fed increased rates for the 3rd time since December of 2015. Now rates are still low. Rates are less than 1%, but we do expect further increases yet this year. In fact, analysts are expecting probably at least 2 more increases this year. Again, rising rates mean that we have a stronger economy. Now the impact that consumers will feel is if you have credit card debt, a home equity line of credit, or a variable rate mortgage, you might see your payments go up sometime soon. So overall, we've seen a lot of economic progress over the past 8 years. We've seen a great stock market over the past 8 years as well, which has largely been driven by the economic progress and the underlying companies that those stocks represent. We expect further economic growth as we see a lot of encouraging signs in the economy today. Again, the labor market is strong today, the housing market is strong. We're starting to see wages increase, and consumers' balance sheets are looking strong. People have higher incomes, and they're able to spend more money. And we expect the economy to continue to grow. We do not see any signs of a recession anytime soon. Well, that's it for this month's economic update. Again, I'm Adam Zuercher with Hixon Zuercher Capital Management. And if you have any questions about your situation and how these events might impact you or your portfolio or your own financial plan, please give us a call at 419-425-2400. You can also visit us on our website at www.hzcapital.com. Thanks for watching.